Yo, what is going on, guys and girls? Hope you are all doing well. I'm hoping everyone can hear me all good. If you can, if you're in the audience in Discord, please give me a yes in the chat. We are going to keep the flow of things going. Any issues with sound or visual at all during any point during today's session, please let me know in the Discord. We will work on fixing anything as it arises. Otherwise, we are going to get started with business as usual. Right, ladies and gents, as I always like to say, welcome back to another week of what I like to call Mind Over Markets. This is your regular dose of psychology, a way to improve your performance in the market. And if you've been with us following this kind of series that we've been covering, I know it's been streamed on a variety of different platforms. I would firstly encourage you guys to go back and watch all of the previous sessions that we have covered. We went over some really important foundational concepts that I think are really going to be helpful for you guys in terms of everything that we're going to be doing in this session going forward. What we've been doing over the last essentially few months that we've been having some time spent together is laying a foundation to help you guys better understand yourself so that when it comes to fixing your problems in the markets, everything starts to make a lot more sense. Now, a lot of those foundations are simply built on the idea that we are human beings. And ironically, I think this is something that most people actually forget when they approach the markets. We as human beings, for I would say 70, 80, 90% of us or more, we are not wired to thrive in a probabilistic environment. We are built, we are bred in a way that is focused on perfection, focused on this idea of going at something as hard as you possibly can, trying to be right. And all of these things, as a culmination of many other things, which we're going to start diving into today, create many of the problems that we experience on a day-to-day basis, whether it's fear, greed, FOMO, revenge trading, frustration, like all of these things that come up on a day-to-day, week-to-week, and month-to-month basis. These are not issues. These are natural human reactions to a lot of problems that we experience, especially when it comes to uncertain conditions inside of a probabilistic environment, which we are currently playing with it. Now, today, I want to focus on arguably, I would say, probably one of the most important aspects of your trading. Everything that we're doing here, there is going to be obviously a strong focus on the psychology element behind everything that we do, but everything is focused around the idea of improving your performance. Now, I find that you can improve your performance when you look at the grand scheme of things in one of two ways. You can either work on maximizing your upside, so increasing your winners to as large as they possibly can, or you could work on minimizing your downside. And I think this is an aspect that a lot of traders often miss, especially when they're relatively new to the markets, especially when they're still finding their feet. They believe that their path to success is all about having more winners or bigger winners and trying to reduce the amount of losses that they try and take so that they don't have to deal with a lot of the emotions that come attached to those situations. I would actually argue that as aspiring traders, as aspiring professionals, for those of you that are in this game for the long run, are looking to develop a track record to manage some serious capital in the long run, I would argue that one of the most important skills that you have to develop as a trader is really about learning how to lose. I find in today's day and age, especially with the likes of social media and the kind of modern day prop firms that are, constantly being talked about, one of the biggest misconceptions is that the sign and a key that someone is successful is the amount of challenges that they've passed, or how quickly they've passed a challenge, or the number of payouts that they've maybe received. And actually, I find that these can actually be quite deceiving. And this is why what we are doing here at Darwinex is very different. It's built on the idea of real sustainability over the long run. And you can't have a sustainable track record without experiencing a period of drawdown, without going through a string of losses. And in my opinion, that's where the professionals and the amateurs are separated, because the amateurs focus on the idea of resetting, right? Modern day prop firms in this day and age, how most of us know them from, the likes of social media, we're focused on the idea that we can hit this reset button, we can do a challenge all over again, and we can simply reset our capital. But in reality, if you're managing personal capital or if you're managing investor capital, there's no reset button. You can't just be like, sorry, I took a 20% drawdown, but let's bring our balance back up to zero and let's start all over again and hope for the best. It doesn't work that way in the real world. So if you're truly invested in becoming a professional in this space, then I would argue the most important skill and the key indicator that looks at how well you are going to perform in the long run is actually how well you can accept a loss. And that's exactly what I want to talk to you guys about today. Because I think if you can develop the mindset to handle not just a single, but maybe a series of losing trades, it's going to better equip you for periods of drawdown, which, by the way, if nobody has told you guys before, are absolutely inevitable, right? They're not personal. They're not a reflection on you or your capability or your skill set. They are simply a statistical part of a game that we have to accept that exists inside of a probabilistic environment, okay? So this is, as I mentioned, arguably one of the most important aspects of your trading when it comes to building a long-standing, profitable track record over time, which is going to attract the right amount of investment over time, okay? So if you're in this for the long haul, arguably one of the most important sessions that you're going to sit in and listen into. Now, in this session, yes, we're going to be unpacking how to become a better loser, essentially. And a big part of that is going to be bringing together a culmination of everything that we've done over our first 4 foundational sessions that we've done together, right? A lot of that was about helping you guys to unpack what's going on beneath the surface. It's helping you guys to understand that the issue is never really the emotion. The issue is never really the thought that you're having. The issue is never the action that you've taken. It's always something that's going on beneath the surface. And so the poetic way that I like to phrase it and that I like to share it with most people is this idea that your emotions are not the problem. They are just an indicator of an underlying problem. Much like if you were driving your car and a warning light popped up on the dashboard, your solution to that wouldn't be to take out the bulb from the warning light, or it wouldn't be to park the car up, turn it off, go for a walk for 10 minutes and hope that when you come back, it suddenly disappeared. You would understand in that situation, it is simply an indicator pointing to an underlying issue. Lack of fuel, low engine oil, low coolant, a flat tire, right? There could be 1,000,001 issues, but until you open up the bonnet and understand what's going on, you're never going to fix the underlying problem. You might be able to drive for another 2 minutes, 5 minutes, 10 minutes, an hour, but at some point, your car is going to go through serious issues. And you as a trader, you as a performer, you have to think of yourself the same way. If you are experiencing a thought or emotion which is causing an issue in your trading, it's not the issue. It's an indicator to an underlying issue. And if you truly want to get serious about solving that, you have to understand what is going on beneath the surface. And that's what I want to help you to unpack today about losing. Okay? Now, I want to start today's session off by getting you guys to actually think about a question. I want to pose a question to each and every one of you. If you're here and you're active on the Discord, I would love to hear your thoughts, your feedback on this idea. If you're watching this on any other platform, you're watching it back on a recording, pause the video for a second and actually take a second just to think about this statement for a moment, right? If you went into every trade, every single position that you opened, if you went into every position and you fully accepted that the outcome of that position could be one of 3 things: a small loss, a small win, or a big win, how could the market ever disappoint you? Just think about that for a second, right? If you went into every trade fully accepting that the outcome could be a small loss, a small win, or a big win, how could the market ever disappoint you in that scenario? And the reality is, if you truly sit and think about that for a moment, it couldn't. The market could not disappoint you if your expectations were completely aligned with the outcomes that the market could present, right? FX Pip Finder says, will never be disappointed, will never disappoint me in that context. And you're 100% correct. Now, why is that, right? Again, take a second to unpack this. Why is that the case? We haven't changed anything. I haven't said you're not going to take a loss. And I haven't said you're not going to experience drawdown or maybe a string of losses at some point in time. The only thing that has changed here is the context of how you think about the loss, right? The only change that has happened is the perception in your mind to something which has happened externally, and suddenly it fixes the majority of your problems. Now, the reality is, if you are ever disappointed in the market, you've only ever encountered one of two problems, right? If you're disappointed as a result of a loss, it can likely ever lead back to one of two problems. First and foremost, based on exactly what we've said, your expectations weren't correct. And this is true for many, many traders, right? There are a large percentage of traders that I've spoken to, that I've worked with, that I've seen operating in the space that didn't go into a position with the right expectations. And that expectation is, I am putting on this position because of X, Y, and Z criteria, because my trading plan says when this, and this happens, I should be getting into the market. But they haven't fully accepted that just because this criteria indicates you have an edge, that edge has to work every single time, right? What happens to most people is they have this trade plan, they have this set of criteria that gets them into the market, but the moment they hit buy or sell and they're in the market, all of the expectations that you should have disappear. And the only thing you could focus on is, please God, I hope this trade works out correctly. You're filled with hopes, you're filled with wishes, you're filled with desires. And the moment that is the only thing that's flooding your mind, you're exposing yourself to disappointment. Because at some point in time, as we've already established, the market is going to do something that you don't expect. The market is going to work in its probabilistic nature, and the market is going to respect the statistics of the game, right? If your strategy has a 50% win rate, the data suggests that over the next 500 trades, you're likely to encounter at some point in time 9 losing trades in a row. Not as a result of your skill set, not because you didn't work hard enough, not because you didn't have the right ambition, but simply because this is how data works in a probabilistic environment. So that's the first issue, right? The first side of this is that you're disappointed because your expectations weren't truly aligned when you came in. The second side of this is that you haven't managed risk correctly. You might be expecting all of the right things, but if you have lost an amount of money that you're not truly comfortable with, then actually you're going to find that you're always going to be frustrated in certain situations, right? A small loss can only be a small loss if it's an amount that means very little to you and it doesn't impact or trigger you in a certain way like it would with certain people. The moment you go past your certain tolerance for risk internally is the moment that you will always be frustrated with the outcome of a trade. It might be perfectly in line with your plan, but because you're not comfortable with the amount of money or the percentage of your account that you have lost, I would classify that as a big loss. And that's the one that we want to avoid. If you're managing risk correctly and you go in with the right expectations, the market can never disappoint you. If you take a small loss, a small win, or a big win, it is almost impossible to be disappointed or frustrated or wanting to take revenge on the market for an outcome, because your expectations were truly aligned and you were operating within a realm in which your risk tolerance was being respected. And this is often a trigger for most people. Okay. So the first point I want you guys to take away from today is I want you to stop and unpack this scenario. If you went into every trade fully accepting that the outcome could be a small loss, a small win, or a big win, then the market could never really disappoint you. And if it does, it means either your expectations are not correct or that you haven't managed risk correctly for you as a person. And this is often a very simple thing to fix, especially when it comes down to the risk tolerance side, right? How many of you guys have actually sat down and thought consciously about the idea, how much money am I comfortable in risking? How much money, like to the dollar, how much am I comfortable in losing today? Because one of the common ideas that is purported on social media, and it's told by everyone said, you'll hear it at some point in time, the right amount of risk is no more than 1 to 2% of your account balance. And in a lot of ways, that can have a lot of merit. It can simplify the process. It can make risk management actually a fairly safe approach, but it doesn't necessarily mean it's the right thing in terms of your performance. If somebody approached me and had a vast sample size of data over time, and they said, I have an 85% win rate, and they're using 1% risk, and they were hesitant to go up, or they were wondering if they could increase their risk, I would actually say, well, given your data, that doesn't seem like the worst idea in the world, right? Because your data suggests that your risk of going into a losing streak is less. Your performance over a large sample size, you're likely to have more winners than losers. So actually risking a little bit more is maybe not the worst thing in the world for you. But for average Joe that's sitting next to you, that has a strategy that has a 35% win rate, might be wildly profitable, but a 35% win rate, risking 3, 4, 5, 10% per trade seems absolutely diabolical. It doesn't align with your data, and most importantly, probably doesn't align with you as a person, right? So the idea that risk management is so black and white that you should only be risking 1 or 2% per trade doesn't work well, especially when it comes to optimizing your performance. Everyone has a certain tolerance that you have to learn to understand, and this is one of the factors that plays a huge role in how you go about actually accepting a loss. Now, the money side of things is one aspect, right? Psychologically, when you unpack why most people don't cope well with losing, it actually goes back to one of two things. The obvious one is what we've been kind of diving into a little bit here, which is money, right? Most of us understand that in this day and age, money is important. It's not easy just to relinquish the idea of ever making money and thinking that you're going to be safe, healthy, and happy going forward, because to a certain degree, money can fix all of those things, right? The money aspect in today's day and age, often it's from a symbolic value, right? Money is a means to security. Money is a means to power. Money is a means to freedom. It's a means to, for some people, it's a reflection of self-worth. For some people, it's a reflection of just having an ability to make choices. But all of this attachment that we place to money puts us in a position where we fear taking a loss, right? And that skews our ability to actually be able to manage risk effectively and stick to our decision-making process, which is ultimately there to help make us money. Now, in psychology, we call this loss aversion, right? This is the idea that most human beings will stray away from the idea of having to accept a loss. And this is why in so many situations, it's easy to hold on to losses with hope, right? We will happily sit in a position whilst it's going deep into drawdown, hoping and praying at some point in time it will turn around and you can just get back out at break even. There's no rationale at that point about holding the trade. Your idea has already been invalidated, but you are just hoping that you don't accept a short-term loss. And again, as an aspiring trader, as an aspiring risk manager, as I like to call ourselves, this is something that you have to be aware of. But I think, again, this is the more obvious one. This is the one that most people are mindful of, but actually still most people don't do the right things to fix. Again, nobody actually sits and asks themselves, how much money am I comfortable in losing? Because today that could be $50, it could be $100, it could be $500, it could be $10,000, depending on your financial situation, right? But if you are trading a large enough size account or managing a large enough amount of investor capital, that 1% of your account that you're perfectly happy with today because it's equivalent of $100 might mean something completely different when you're trading a much larger account, right? The same 1% on a $100,000 account is now $1,000. Are you going to feel the same way about that? Is your risk tolerance aligned in the exact same way? And so thinking about your personal risk tolerance and how that equates to this attachment to money that we naturally have is a very, very important part of the process, especially in terms of the psychology and understanding why most of us are actually such bad losers. Okay. The second side to this, and this is the one that most people often don't put as much emphasis on, is actually the attachment to being right. Right? Think about that for a second. The attachment to being right. I've spoken to, and again, been very fortunate to connect with so many traders over the last few years. Many of them unsuccessful, very few of them actually successful. And one of the things that I often see is when people go through setbacks, challenges, hurdles, periods of drawdown, one of the things that often gets them and keeps them in that cycle and never allows them to truly escape is actually they stop doing things in line with their data and they start doing things because they want to be right. And this is a very easy trap to fall into. Most of us psychologically are wired in a way that we prioritize being right. We have actually been hardwired to believe that being right is the key to success. Now, again, reflection question for you guys, something that I want you to think about and understand where this mindset comes from. Where does this wiring actually stem from? Because, by the way, we weren't born with it, right? We weren't born with this wiring that says, in order to be successful, you have to be right. It was a learned behavior. So the question that I want you guys to think about, and again, if you're in the Discord, feel free to get active and think about this. Where did you learn that being right is the key to success? Because it has been learned at some point. We came into this world completely neutral. We didn't know anything. You have learned at some point in time that being right is the key to success, right? Bingo. Discord is hot on it today, right? FX Pip Finder says, school. Snowy says, we need to be 100 out of 100 score in our school exams. And that is, for most people, the environment where you get taught. And I'm not going to call it a flawed mentality, because in many aspects of life, that could serve as a truth. But in a probabilistic environment, like we are talking about, that idea doesn't really serve us very well. The modern day educational system puts emphasis on the idea of having correct answers or good behavior earning you this kind of social status, which rewards you in the long run for being correct. Now, this often fosters a fixed mindset, right? Most of our beliefs that we have learned over time have come from childhood. They've come from a point in time where your mind was simply a sponge and it absorbed everything around you. Most of us are wired to believe that good actions yield good results and bad actions yield bad results. Most of us are wired to believe that if you get 40 out of 100 in your school exam, that's not a great result and you cannot be successful and you can't get into the university you want, and therefore you can't get to the job that you really want, and therefore you can't make the money that you want, and that is why you will always fail in life. That mentality comes pre-wired into our mind. Nobody is ever taught that second place is okay. Nobody is ever taught that, hey, you might be able to fail 8 out of 10 times, but actually the 2 that you do win can completely counteract all of the times when you are wrong. Most human beings are not wired in that way. So that fixed mindset where people view their abilities as static, they're the people that often feel threatened by failure, right? So I want you again to understand something that we said right at the very beginning. Most of the problems that you experience, they are not because you lack discipline. They're not because you're not worthy enough, or not because that you're not disciplined enough. They're simply because you are wired in a way that is not allowing you to thrive in a probabilistic environment. Now, again, think about how this mindset translates into our trading. Right? This can lead to very simple issues that many people experience. Not keeping a stop loss, right? Because you don't want to accept being wrong. It might make you more likely to give in to FOMO in certain situations, because you believe that missing out on a situation is not going to be the best thing for you in the long run. So most people fall into this trap of always prioritizing being right instead of doing things that their data suggests actually make money in the long run. Okay? So again, from a psychology perspective, I'm hoping you guys can see the common pitfalls that we are falling into, not because we're not good enough, not because we're not trying hard enough, but simply because we've been wired in a way that doesn't allow us to thrive in a probabilistic environment, right? When it comes to losses, we are often attached to 2 things which hold us back: the attachment to money and the attachment to being right. And the job that you guys have in order to really fix this problem is you have to understand which one is actually impacting you most. That's the key in actually resolving this issue. It's understanding which issue is holding you back most. Okay? Now, how do we actually, I want to give you guys a framework to really work within to help you guys to understand how to unpack each of these issues and work through this in the long run. FX Pip Finder says, my mind is opening up to new things. Love to hear it. Is this recorded? Yes, it is being streamed onto YouTube, where you will be able to watch the recording back. So yes, there will be an opportunity to go back through this as many times as you need, take the nuggets of information away, and hopefully apply them to improve your performance in the markets. Okay, but loving to hear the fact that you guys are enjoying this. And again, this is what I've been talking about over the last 4 sessions that we've kind of done together, right? This idea that everything that we have been building on in the last 4 weeks in terms of unpacking what's going on beneath the surface, understanding the psychology, understanding the thought process that goes on internally, it all builds into moments like this. Because now what we're doing here is we're not saying that, you know, to become a better loser, you just need to man up, or you just simply need to reduce your position size, because that's not necessarily the best advice if it's not the right psychological problem that you're dealing with, okay? So how do we actually work on fixing these problems? We've established that you could be experiencing a frustration when it comes to losses for one of 2 reasons. You have an attachment to money, which is not serving you in the markets, or you have an attachment to wanting to be right because you've been programmed to believe that actually losses are a bad thing. How do we overcome this problem? How do we start to become better losers? Well, the first thing that I will say, and you're going to notice, and I'm going to say this now so that it's documented, and that when I refer back to this in 2 weeks, 3 weeks, 6 months from now, a year from now, whatever it is, you will understand that I laid this foundation right from the very beginning. Something that I would recommend, and you're going to hear me bring this up in a lot of sessions together, that I think will truly help to fix most of your problems, starts from an internal perspective. It starts from the mind. It starts from having a higher level of self-awareness so that you can understand how to fix your problems from the get-go, right? Now, one way, or I should say a couple of ways that I always recommend raising that level of self-awareness, and this is going to be something that we touched on as part of our foundational sessions as well, is you want to practice 2 things. The first one is mindfulness, right? A practice of learning to be present and recognize what you're experiencing in real time. Because if you're only recognizing thoughts and emotions after the fact, it's never really going to serve you in the long run. It's never really going to give you the type of feedback that you need in the moment to be able to break free from your patterns of behavior. Hindsight is 20/20, 100%. But if you want to be able to do something different in the moment, you cannot afford to always find your lesson in hindsight. So I truly believe that being present is a superpower, right? Being present is going to be the first step to actually recognizing thoughts and unhelpful emotions in the moment and actually give you an opportunity to do something about it. If that's something that you want to start improving, if you find that you are constantly acting from a state of autopilot and only recognizing your mistakes after the fact, then I would suggest mindfulness should be the starting point in which you need to focus on. And there are several ways to practice mindfulness. My preferred way is often through meditation. That could be a small morning stint at the start of your day. It could be an evening stint to wind down your day, but it simply just needs to be a very short but consistent practice that helps you to sit down and observe what you are feeling in the present moment. Now, one thing I do want to say, and I always like to give this as a disclaimer, most people struggle with meditation because they believe that the objective is peace. They believe the objective should be a calm mind that has cleared their head and not thinking about anything. And actually, I find that is one of the worst objectives to have, because when you don't complete your objective, you feel like it was a failed session. You feel like you've done something wrong. You feel like I haven't achieved the goal that I set out to, and therefore it hasn't been a great session today. The moment you foster that negative mindset, the less likely you are to be consistent with that practice in the long run. And the benefits of a mindfulness practice or a regular practice of meditation only come from consistent effort, consistently showing up. It's no different to me saying going to the gym is not going to give you abs overnight, right? There's no amount of salad that you can eat today. There's no amount of sit-ups that you can do today that will give you a visible six-pack tomorrow. You could do all the right things, but you have to do it for a consistent time in order to reap the rewards from it. So I would always recommend treat meditation in the exact same way. Go in with the right objectives, which are understanding that this is simply an exercise in awareness. I'm not trying to change my mind. I'm not trying to alter it. I'm not trying to say this is good or bad. I'm simply trying to be aware of what I am experiencing. That is the base practice that you can go on, because as long as you are present with watching your mind go 100 miles an hour and think about all the things that go on inside your head, you have won. You haven't lost. It's impossible to lose when your job is awareness. As long as you have recognized what's going on in your mind, you haven't lost. You've won. Now, the more consistently you do that, what you do is you start training your mind to recognize this as a habit. You start training your mind to recognize this kind of trigger, to remember that, what am I thinking of right now? What am I feeling right now? How am I acting right now? And the moment you can start recognizing those in your personal life, that becomes a transferable skill that you can bring to trading. And what that did for me was, and again, I'm not going to sit here and BS you into this idea that I am this perfect human being, but I would say 8, 9 times out of 10, when I'm feeling frustrated, before I act frustrated and do something that I'm probably going to regret, I recognize it. I understand, hey, you're pissed off, you're angry, you're feeling FOMO, you're wanting to take revenge, you were too attached to that position. But instead of acting on those emotions, I let them go. I have a tool set, I have a skill set to be able to regulate what I'm feeling so that I can come back to the present moment and do things that are best aligned with my data. Again, am I claiming that this is going to make you a perfect individual? No, purely because I don't believe perfect individuals exist. We are human beings. And if you're not accepting right from the very get-go that at some point in time, you are going to make a mistake, you're going to miss an opportunity, you're going to screw something up, you are setting yourselves up for failure. Because we as human beings are imperfect individuals. And you have to be able to accept that if you want to find a certain degree of success. Okay, so that's step one. Step one is understanding that you need to build a certain level of awareness to solve the problem that you are currently facing. The second side to this is I always encourage coupling that practice up with journaling, right? For me, I always say the holy grail in trading is not a strategy. It's not having a certain mentor or a coach. The holy grail is your journal. And it's the thing that most people neglect. The reality is, and I always give this very silly example, and I'm going to share it again here today because I think it really serves the purpose. If I asked you all today, what did you have for your last meal? What did you have for breakfast, lunch, dinner, depending on what time of day that you're watching this, right? What did you have for your last meal? You could probably tell me. If I asked you what you had yesterday, you might have to stop and think for a couple of seconds, but you'd probably be able to tell me. What if I said, what did you have for lunch this time last Monday? Maybe some of you would be able to recognize this or remember it, but maybe it would take you some time. What if I said last month or 3 months ago or 6 months ago or 2 years ago to the date? What did you have for lunch? The reality is your conscious mind has a limitation with the amount of memory that it can hold. Maybe somewhere in your subconscious it will be stored. And if you develop an ability and a skill set to be able to pull that, maybe that's something that you can benefit from. But is that really the type of energy that you want to invest into being able to remember something like that? Probably not, right? However, journaling can fix all of those problems in an instant. Simply by keeping a record of what you have been doing at this time allows you to accurately reflect tomorrow, next week, 6 months, a year from now, and be able to draw meaningful conclusions based on real data that has been recorded. If you are keeping a journal the right way, you're going to be documenting not just the trades that you're taking, but your thoughts and your emotions in line with those positions that you're taking as well. Because really, the actions that you're taking are a byproduct of your thoughts and your emotions, right? Most of us fit into that category. So the key to actually taking better actions is to understand what is going on internally. What's going on in my mind that is driving me to think and feel this way, which is influencing the actions that I'm taking. So really, over time, your journal becomes the holy grail because it shows you the connection between your thoughts, your emotions, and your behavior. Now, when you combine that process with mindfulness, what you're going to develop is a framework to understand why you are taking the actions that you're taking. And not just an understanding of why you're taking them, but the pattern at which they all play out. You're going to be able to start recognizing that, hey, every time I haven't taken a trade in 24 hours, I start developing an urge to do something stupid. I start developing an urge to overtrade because what I'm actually experiencing is boredom, and I need to find a cure for that boredom that involves not being on the charts, right? So when you start to develop that pattern recognition behind your actions of behavior, and you start to develop the mindfulness to recognize those patterns that you've built awareness on in the moment, that serves as a very, very strong foundation to start fixing many of the problems that you've had. Now, let's take this back full circle to exactly what we're talking about today. We're talking about the idea of becoming a better loser. We're talking about the idea of how to accept losses better and start doing the right things in line with your trade plan. Well, if you've started with the right foundation and you've started to build this higher level of self-awareness, the first thing that you should be doing in this situation is stopping and asking yourself, what am I attached to in this situation? Because we've established that you could be a terrible loser for one of two reasons. It could be because you're attached to money, or it could be because you're attached to outcomes. You're attached to the idea of wanting to be correct. Now, understanding which one you suffer with more, there could be a possibility that you suffer with both, but understanding which one you suffer with more and which one is a bigger performance hindrance for you is key to actually being able to solve your problem. Because now, again, we're not talking about something in the general sense. We're talking about being very, very specific about you as the trader, right? What am I suffering with that is causing an issue in my performance, and how do I fix it? This is where I say understanding who you are as a person is the key to improving your performance. When you start to understand the problems that are impacting you directly, then you can start working on the right solutions to fix the right problems. And I want to give you a very, very quick example to show you exactly what I mean by this. If you have established that actually you are attached to being right, you are attached to the outcome of your position, you want yourself to be right on a subconscious level, actually more than you want to make money. And this is why you do certain things that doesn't necessarily align with your data, but it makes you feel good in the moment, like removing your stop loss, like not respecting your risk limitations that you have imposed over a day or a week and continuing to show up and trade. You only do those things for one reason. You're trying to be right. You're trying to prove that your idea was correct. You're not accepting that the market can sometimes do whatever the hell it really wants. Now, if that's your problem, if you're attached to being right and you don't care about the money aspect, you want to be right in a situation, do you think reducing your position size is going to be helpful? Because that's usually the advice that most people give online when it comes to better accepting a loss. They say, hey, just risk less money, reduce your position size. That can be good advice if your pain point is that you are attached to money. If you're attached to being right, you're going to be pissed off even if you take a loss on a demo account. You're going to be pissed off even when you backtest and take a loss. And again, I don't say this from a place of ignorance. I say this because I've seen it. I've spoken and worked with traders that go through a phase of backtesting and demo trading, and they cannot handle the idea that the market has not done what they wanted to happen. There's no position size in the world that will fix your problem if your problem is that you are attached to money, right? So truly understanding what you are attached to is going to be the key to fixing this issue. And the best way to understand which one you're attached to, if you don't really know which one fits you as a person, start by coming off of, if you have bad habits that are currently ruining your performance, I would say start by going back to demo trading. Spend the next 2 to 4 weeks demo trading and observe if your reaction to taking a loss is the exact same. Right? Think about that for a second, because if you remove the money aspect and your problem still exists, you still have those bad habits, you still have that resistance to wanting to accept a loss, what does that tell you? Well, you removed money. The only thing that you are left that you are attached to is the idea of wanting to be right. You don't like the market proving you wrong. You don't like having to accept a loss because deep down you have a belief system that reflects the idea that losing cannot make me successful, right? If you go back to demo trading and all of your problems disappear, and I see this in many traders, you go back to demo trading, you go back to back testing, I can do this perfectly fine. I can make so much money in my demo trading, but the moment I go live, I can't seem to do anything. I can't seem to replicate it. I hesitate. I can't accept a loss. What are you attached to in that moment? Because the only thing that's different between demo trading and live trading is the money that's on the line. That to me has an indication to say that you have some level of attachment to the money that's on the line. It means that you haven't carefully assessed and sat down to ask yourself, how much am I actually attached to the amount of money that I'm risking? So I'm going to separate these into two separate categories, and I want to break them down one by one. Overcoming the attachment to money and overcoming the attachment to being right. I want to give you some real practical advice to help you to deal with either of those situations, because depending on what you're experiencing, you need to apply the right fix for the right problem. Just like we talked about, reducing your position size is not going to be helpful if you have an attachment to being right. Being wrong is going to hurt just as much if that's your problem. Okay. FX Pip Finder says an EA is the best and closest thing to archiving this then when you don't get in the way with your emotions. 100%, right? If you find a way that you can code something and you can let that run almost automatically in the background without your intervention, absolutely fantastic. It is the cleanest way to get into almost perfect execution. But the reality is, for the vast majority of traders, whether they know it or not, they have a certain level of discretion that they either don't have the knowledge or capability to be able to code into a way that will allow an EA to run basically autonomously. And there are some people, again, in certain situations that actually want to be the ones clicking the button. They have a passion, they have a love for this industry, and they want to be the one that makes the decision-making process. There are going to be some people that level of discretion is actually what gives them an edge in the market. I would argue, I don't think it's probably going to be the case for most new traders. I think an edge in terms of your gut feeling or some level of intuition can only be developed with a certain level of experience. It's like saying I have a gut feeling or an intuition that I can drive a motorbike if I've never driven a motorbike. Gut feelings and intuition have to come from a certain level of experience. So if you're a new trader and you're saying my level of discretion has an edge in the market, how do you know? In most cases, I would agree with you, FX Pip Finder, right? I would say, an EA is the closest way to the cleanest level of execution, if it's possible for your approach in the market. Snowy says it can take a long time to develop one that really works. FX Pip Finder says, well, turning up every day in the right direction will help. Just like when the speaker says you should not expect a six-pack in one session training at the gym. 100% agreed. Snowy says live trading is worse. Psychological challenges are greater. Seen too many cases from Wall Street bets. Yeah, that's a dangerous subreddit to definitely be spending some time on. There's a lot of horror stories in that scenario for sure. Okay, so let's go back to what we were talking about here, right? We've got to the situation where you have started to discover that either my issue is I am attached to money or I am attached to being right. How do you go about fixing the problem? Let's start with the more obvious one. Let's start with the attachment to money. Now, actually, we've been kind of alluding to this fix throughout this session, right? We've been talking about this idea that everyone has a personal risk tolerance, right? Everyone has an amount of money that they are comfortable losing. And if you don't know what that number is for you, you can bet that it is going to be something that often works against you. So the first thing that I would say is stop and ask yourself, what is your current pain threshold when it comes to risk? How much are you comfortable losing before you start going on tilt? Because everyone has an amount. I don't care how much money you are used to dealing with, making, spending. It doesn't matter to me. Everyone has an amount of money. For me, that number might be $50. For you, it might be $500. To a millionaire next door, it might be $50,000. But everyone has an amount. Everyone has that limitation. Now, granted, it can change and it will change over time, but you have to understand what that number is for you. If you are sticking to the arbitrary advice that you see online, which is Risk 1% of your account balance and it'll be perfectly fine, but you're finding you're still pissed off after every loss that you take. Take a second to reflect on this, right? My honest advice for most people is to start incorporating aspects of your data to help make a well-informed decision. If you're saying, and again, let's stick with some round numbers here. If you're saying that you have a 50% win rate, right? Let's say, and again, we're going to keep this very, very black and white. It's not likely to work this way in reality, but let's keep it black and white for the sake of the example. You have a 50% win rate. You should expect, hypothetically, 5 out of your next 10 trades, you're likely going to win or lose. Again, probabilistic environment, it's not likely to be the case. But for the purposes of the example, we'll say 5 out of 10 situations, you're going to lose. You're going to be wrong. I would say if you know that over the next 10 trades, you're going to be wrong at least 5 of those times, risk an amount of money where you could take 5 losses in a row and not be pissed off, not be on tilt. So let's say your current risk tolerance is $100. Again, we're going to keep it round numbers, keep it nice and simple. My current risk tolerance is I don't like losing more than $100. If I risk $100 per trade, then guess what? I take 1 loss and I'm at my risk threshold. I'm going to be pissed off after that. If I take a second loss, is it a surprise that I'm on tilt? Is it a surprise that I'm annoyed at the market? No, because you've reached your risk tolerance. So what I would say is, if you know that your data suggests that, let's say hypothetically, 5 out of the next 10 trades, you're probably going to lose, then I would say that actually you're better off risking $20 per trade. Because at $20 per trade, you can lose 5 times potentially in a row, and you would only be at your ceiling for your risk tolerance before the statistics and the probability starts to kick in again. Again, it's never going to be as black and white as that, but I'm hoping you can understand what I'm trying to say here. Use your data to help you to understand how many losses am I likely to take, and then take your personal risk tolerance, which you have discovered by looking inward, and start to adapt your risk criteria in alignment with that. If you're talking about trading with a clear and calm mind, there is no better way to go about it than from that perspective, right? Aligning the data that the numbers are telling you, and the numbers will never lie, and aligning that with your personal risk tolerance is going to put you on a path to being able to detach from money. Now, outside of that, what I would say is you want to take your focus off of the money itself. The problem that most people have when they're attached to money is it's the only way they score their performance. They get to the end of a trade or a day or a week or a month, and they look back and they say, is my account up or down compared to where I started? And that is a measure of my performance. The problem is, as a trader, you never really have control over how much money you're going to make or lose, right? You have no control over it. So if you're measuring your performance by how much money you've made over a small sample size of time, you are always exposing yourself to the idea of disappointment because you have no control over it. So what I would say is most traders would be better off giving themselves a score system that is not based around money, to give yourself an idea that you're doing the right things, to know that you can be consistent even when nothing goes to plan. So what I would say is give yourself a scorecard based on how well you have stuck to your process. Rank the things that you actually can control. Entering the trade, managing the trade, exiting the trade, and risk management. That's it. Outside of that, there's not much else you can really do. Entry, management, exit, and risk. That's all you really got control over, right? So what I would argue here is that if you focus on doing that, you're going to develop a more consistent mindset. You're going to develop a mindset that allows you to understand, hey, even though this trade didn't work out, I did all the right things here, and I should give myself a pat on the back today. I may have lost money, and that sucks, but I did all the right things, and that deserves a round of applause. That deserves some type of celebration, because that's what's going to give me a more consistent mindset, right? So those two things are the thing that I would really encourage, right? Understanding what your personal risk tolerance is, and then building a scoring process which takes your focus off of just the money and allows you to focus specifically on your process. Now, again, you can couple this up with some of the standard things that you will see online. If you're struggling with your attachment to money and you don't know how much or what that tolerance is for you, Just start with a general rule of thumb, drop your position size by 50%. How would that change things for you mentally, right? If you were risking half the amount that you were now, how would that change things for you mentally? Now, I want to give this a little disclaimer. Most people hate the idea of reducing their position size. They hate the idea of risking less money because the only thing that they are focused on is when I inevitably take a winning trade, I'm now going to make less money. And the thing that I would say to most people that are struggling with this idea is I want you to remember that trading, being successful at trading, is a two-step game. Step one is make money. Step two is keep money. Yes, using a higher position size is going to make you more money on your winners. But if you're not left in a good headspace after a losing trade and it causes you to give all that money back, it's pointless. It doesn't matter. So what I find is most people would actually be far better off reducing their position size, actually making less money on their winners and losing less money on their losers, but actually having a more consistent mindset. Because what you're going to find is you're not going to unnecessarily give money back, and that's what's going to help you find your path to profitability, right? So if you're stuck with the idea or the attachment to money, that is kind of the advice that I would suggest following. Look at your personal risk tolerance, give yourself that score process, the process-based scorecard, and reduce your attachment to money. Actually work on dropping that position size, and even focusing on the idea of, and again, in this day and age, it's usually unconventional advice, but make more money outside of the markets. Use free time to make more money outside of trading. If you're attached to $100 today because that is the amount that you bring in on an average day at work, how would your mentality change if you started bringing in $200 a day? The $100 is going to mean less to you, right? So you can reduce your attachment to money by either dropping your position size or making more money outside of the markets. Again, defeats what the narrative is of social media, which is, hey, we could change your life in 30 days and you could become a full-time trader and earn all your living without a boss and clients and all the BS that you hear online. In my opinion, and again, it's usually an unpopular one, you will never trade more clear-headed than you will if you don't need the next trade to win. And the best way to do that is to have money outside of trading that is not reliant on a probabilistic environment to help pay the bills. And I will always be real with you guys. It was a big reason as to why I wanted to start a coaching business. When I went into the game, honestly speaking, I wanted to be a life coach. I kind of fell over into this space of working with traders and combining both of my passions. But honestly speaking, and this is the side to the social media that you will rarely hear online, making more money in my business makes me a better trader because I don't need the money anymore, right? It means when I go through periods of drawdown, I don't care as much because I know my bills are going to be paid for. And so I would encourage it, whether it's a business, whether it's a job, whatever it is, have a secondary source of income to help you trade with that clear state of mind. I promise you, if you want the quickest hack to improving your trading psychology, get a second form of income. It will fix so many of your problems when you will start to realize how much I have been attached to it, right? The moment you can clear that level of attachment and just work on another source of income to pay those bills, it will change your life, okay? This is all step one. Step one is I have identified that I'm attached to money. That is a framework that I would use to fix that problem. FX Pip Finder says, I'm attached to money, listening to you, and I know someone who is attached to never wanting to lose, and I have never been more profitable than he is. We need to watch the session together again. Thank you. I really appreciate it, and I'm really glad to hear you're finding some value in this. I reduced my lot size on my Darwinex account, and I felt better than I was last year. You are right. It happened to me. And again, it makes complete sense, right? You have identified that you are attached to money. Therefore, reducing the amount of money that you are losing in each position is going to be a direct reason as to why you can trade with a clear head. Understand the psychology behind what you're experiencing, apply the right fix, and instantly you start improving your performance in the markets, okay? Now, the second side to this, and this is where we can start to get a little bit fun with this, the more unconventional one that most people ignore, overcoming the attachment to being right. How do we do this, right? I want to start giving you some really interesting ways to overcome this. First and foremost, I think the key to breaking free of this belief system, because that's what it is, right? We've already established this has usually come from the educational system. I want you to stop and ask yourself, is your belief system currently serving you? Is your belief system currently serving you? Right? Now that you've established it is a belief and you have learned it along the way, is that belief currently serving you in your trading? Something that I want you to stop and ask yourself, if you're feeling that attachment to being right, and this kind of ties in with the idea of being more mindful about what you do, ask yourself at some points during your trading day, am I trading to be right or am I trading to make money? Because often they don't go hand in hand. Often they are two different things, right? Am I trading to be right or am I trading to make money? Because often the thing that makes you money is going to be the thing that is going to be following your data, what your data suggests. And I'm hoping and praying that everyone has that for them, right? The second thing that I would say, if you're trying to improve your ability to get over this idea of being right, you need to focus on collecting more data and doing more back testing, right? There's a lot of people in the retail trading space that really shit on the idea of the import of back testing, right? They say, well, back testing is useless because it doesn't test my emotions. Therefore, it's not a true reflection of what trading is like. Therefore, I shouldn't waste my time with it. What I say to most people that have that philosophy is, do you think bicep curls are pointless because they don't give you abs? Would you just think, all right, I'm never going to do a bicep curl again because it doesn't give me the six pack that I'm chasing towards? No, it's the wrong exercise for the wrong job. The purpose of back testing is not to work on your emotions. The purpose of back testing is to expose you to how your edge performs over time. Well, firstly, it's to prove that you actually have an edge. But secondly, it's to expose you to the idea that your edge, how it actually works over time, how many losses that you should be taking, and how you should frame your expectations going forward, right? If you're going into every trade and you're expecting and hoping and praying for a winner, but your data suggests that your profitable strategy that you're working with only has a 30% win rate, are you going in with the right expectations if 7 times out of 10 you're likely to lose? If you have a win rate of less than 50%, that should suggest that actually your next trade is more likely to lose than win. So actually praying for a winner is the worst possible thing that you could do. So it starts from this idea, right? How much back testing have you actually done? How much data have you actually collected to prove that your edge actually exists and to show you how it will work over a large sample size? For most people, probably not enough. Okay, so I would say increase the amount of back testing and data collection that you have done, and that's going to help to show you over time that the best loser wins in this game. As Tom Hugard most poetically put in his book, the best loser wins. Okay, now I want you to couple this up with the idea of understanding that this game is not about being right. Most people come into this, most people come into the markets and trading and investing with this ideology that this is either right versus wrong. I've either made money or I've lost money, and it's as black and white as that. One side I've succeeded, one side I've failed, right? This game is not black and white. This is not about I'm either right or I'm wrong. If you fall into that black and white line of thinking, you're going to end up in a place of frustration. And so what I say to most people, the best way to think about this game is it's not right versus wrong. It's about how much money am I going to make when I'm right versus how much am I likely to lose when I'm wrong. The moment you can go into this, not trying to predict the market, but simply trying to manage risk, it's going to start to frame your mindset in the way that losses are an acceptable part of the game, as long as they are in line with your edge, right? So flip that mentality. It's not right versus wrong. It's how much will I make when I'm right versus how much will I lose when I'm wrong. That's the mindset of a risk manager. And that's the one that's going to serve you best in the long run. Okay. Last tip that I want to give you about overcoming this attachment to being right. And I think you guys will like this one. This is probably one of the most the most favored one that I like because it has a huge play on human psychology, right? When we think about the idea of wins and losses, successes and failures, passes and I guess failures, right? What do we connect that to? We've already established that that idea, that mentality is driven from the schooling system. And the schooling system teaches us that if we are right, then we can succeed. If we are wrong, then we will never succeed, right? Now, I want you to think about how this relates to trading. When you record your trades, your wins and your losses, what do you document them as? A winning trade and a losing trade. Psychologically, what does that do? It connects you to a belief system that goes back to a deep-rooted place where you have been taught that losing is a bad thing, right? Now, what if we flip this slightly? What if we try and change our perspective of the belief system? I'm going to say 2 words to you guys, and I want you to, again, if you're in the Discord, I would love for you to tell me what this brings to mind. Where do you hear these words thrown about a lot? Revenue and expenses, right? What part of your brain does that tap into? What's the immediate business industry that you start to focus on? Kind of a slip of the tongue there. I kind of gave that away. When you hear the word revenue and expenses, most people relate that to a business, right? That's the terminology that you often hear inside of a business. Now, when you run a business, you expect that you're going to make money and you expect that you're going to have expenses that go on that you have to pay in order to run that business, right? What if instead of every trade that you took, instead of documenting it as a winner or a loser, which we have already established, it connects with the wrong type of belief system? What if you recorded a winning trade as revenue? And what if you recorded a losing trade as an expense? It doesn't change the trade, it doesn't change the outcome, but psychologically, it starts tapping into a different belief system. It starts tapping into a belief system to understand that revenue is money in, but I sometimes have to pay money out in order to keep my business running, and those are my expenses, right? If you shift that mindset to revenue and expenses, it can help open up the idea of thinking about trading exactly like you should, which is treating it like a business, right? I have this philosophy, and I'm sure I probably heard it somewhere. I heard it poetically put as, if you treat trading like a hobby, you're going to pay for it like you would a hobby. If you treat trading like a business, it will pay you like a business does, right? So keep that philosophy in your head, apply that to your trading, adjust your journals to see if you can reflect that terminology and see how it starts changing your perspective on the outcomes of your trade. You're going to find that when you start tapping into a different belief system, it will change your attachment to being right. And it will get you to focus on the types of things that you actually can control, which is always the level of risk that you are exposing yourself to in the markets. Okay. As a final summary, I know we've overrun by a few minutes here. I usually like to keep these for around 60 minutes or so. As a final summary, the big takeaways that I want you guys to think about from today's session, I want you to ask yourself first and foremost, before you try and fix anything, understand for you as a person, what are you attached to? Are you attached to money or are you attached to outcomes? And if you don't immediately know, go back to demo trading for 2 to 4 months, right? If the aspect of live money fixes your problem, you have an attachment to money. If the issues still exist, even in a demo environment, then it's likely that you have an attachment to being wrong, or an attachment to being right, sorry. Once you've then got your understanding of what is driving the problem, then apply the right fix for the right problem, exactly like we talked about today, okay? I hope today's session has been insightful. I will stick around for maybe a minute or so. If you guys have any questions, I want to give you an opportunity to please throw them inside the Discord chat. If you have any questions, please throw them there. I will happily answer as many questions as I can without overrunning on this session by too long. Snowy says, I think this was a comment from before, I am first a trader and then an investor, then back to trader. It helps to grow dividend income whilst improving my trading. I go back and forth with trading and investing depending on market conditions. Snowy, I actually have a very, very similar approach. Earlier this year, I'll give you a very quick short story, but to help you to recognize that I work exactly the same way. The last time Trump was in power, I'm generally, my shorter term trading, I would classify myself as a swing trader. The last time Trump was in power and the last time he was yapping his mouth on social media, My strategy got absolutely slapped about with the amount of volatility and uncertainty in the way that price was being thrown around, basically based on nothing. I found when Trump came back into power, I actually spent around 3 or 4 months away from shorter term trading. And I used that time away from the shorter term stuff to go into my investor mode and actually work on buying things on a dip that I wouldn't mind holding over the next 5 or 10 years, right? When I found that conditions had started to settle a little bit, I was starting to see my analysis play out a little bit further. I then went back into my shorter term trading, and I found that was a very, very beneficial approach for me psychologically. So I can completely resonate with what you're sharing there. Again, this is not me saying I'm the perfect or the world's best trader, but in more situations than not, my mentality towards the market is a big part of my edge. And knowing that I have kind of the mental stability, or what I like to call a state of emotional equilibrium, that's what really helps me to be consistent in the market. Not over a short space of time, but over a larger sample size, 100%. So yeah, completely resonate with what you're saying there, Snowy. If there are no other questions, I will wrap things up. I will leave you guys to enjoy the rest of your days, evenings. I hope you guys have enjoyed the session. I hope you found it insightful. I hope it's given you something to take away and help improve your performance in the markets. I hope you have a disciplined couple of weeks until we talk again next time. But for now, thank you guys very much for your time. And I hope to speak to you again soon. Thank you very much. Take care, my friends.